Today. It's just me and Jennifer. Mark's not able to make it. He is dealing with some family things. So it's great that he can go and be with his family. And we're going to miss
Up
him
in
today. We had it
Wyoming?
out west somewhere.
Wyoming, I think.
We had a speaker lined up, but they can't make it, and that's okay. So we're going to talk about a couple things today. Jennifer and I, just before we hit the record button, we're like, well, let's record this because these are some great things we can share.
Yep, I'm coming to you from Winchester,
Tennessee, down on the lake. I was complimenting her hair today. I've never seen her with straight hair. I said, "Is that lake hair?" And she replied,
"Lake hair is when it's actually very curly because I haven't done a thing to it, and it'll curl here and be straight here because great German heritage."
There you go. I have great German heritage too, and it's just a crazy mess. So
right, I don't know. Well, I won't go down that road about what we were trying to achieve with hair and perfection. I would not have been chosen.
All right. We were talking a minute ago about our podcast. So this is our second season. I think we're going to be wrapping it up here.
Yeah.
And we're going to start a new season. This is episode 16. Doesn't have a title, as you can see. Jennifer at the bottom below her, you can see it says,
I think it's going to be the lender you know.
The lender you know. Well, over here it says, "I love my Tennessee home." That's her moniker. And below me right here, it says, "There's never been a better time to buy." And that's one of the things we're going to talk about today is Jennifer and I have a few clients and people we're dealing with that are struggling with making a decision about what to do right now. We're going to talk about that. But I said, let's hit record a second ago. And here's why I said, let's hit record. I was expressing to Jennifer that I have had an influx of people that are applying with me that I don't know, that aren't referred by somebody. So my whole career, I have been, there's even a sales program, Jennifer, referral by something. What's it called?
Oh, I don't know.
Well, I've been 100% referral based.
Referral driven.
Yeah. So people have to tell someone, you got to call this Lance guy, or they got to see my name maybe on Jennifer's listings. So recently, the last couple of weeks, I've had 3 or 4 just random applications show up. And I get a notification that says you've got an application. And I'm like, oh, okay. And I start checking my texts. I'm like, did I miss something? Did Jennifer say this person's going to call?
Jennifer, do you know this person? No, but introduce me.
I work with, a couple other ladies and guys, and I'm like, oh no. So I call the customer. I'm like, hey, before I get started, I can't wait to help you, but how did you hear about me? Who referred you to it? Is it a realtor? No, in these cases, they said they went online and they typed in who's a top lender in the area, who's a good mortgage lender. And they said, you popped up first and we read your bio and wow, we really like that. We want to go with you. Well, to me, that's against that. It kind of doesn't make sense, but Jennifer and I were just talking because it does make sense in the fact that Jennifer and I both started our careers by referral only in a time where we didn't have internet. We didn't have
I did desk duty too, but yeah.
You were a little bit later
from the company.
You were a late bloomer.
Yeah.
When it came to that. Well, I started 25 years ago.
Yeah.
And there was no social media yet. The websites were pretty rudimentary. But over the years, with our involvement with BNI, Business Network International, and other people we've surrounded ourselves with, and osmosis, Jennifer's got 2 sets of twins that have come up through the school system, and the boys especially are super tech savvy. I know the girls are too. Mariah's and she deals with intelligence, and Hannah, she listens to people all day long, so she probably hears a lot of things.
Yeah.
But where I was going with that is we've been drilled into us. If you're going to do social media, you've got to have 3 things: proximity. So whoever the person's searching for, you want to be close to them. Consistency, the fact that whoever's putting this information out onto the web, the internet, so to speak, that consistently do it. And the third is accuracy. Mm-hmm. And accuracy is recorded, or the way that that's qualified is by reviews that you get, or other places that can cross-reference what you're saying, or even AI cross-referencing what you're saying with what it believes to be the truth.
Right.
So we've started to see, it's pretty exciting for Jennifer and I, we've started to see a lot of views on our videos.
I think there's one other thing too that I really, our authenticity, the fact that we are very open, transparent, um, straight shooters, if you might. I think
Not,
that a lot of people look for that in these industries that have reputation about down there with lawyers and car salesmen. No, nothing
yep,
wrong with those, but they're not traditionally known as open and forthright.
exactly. You
I
know,
It's
pro-
just people have been
we're not
wanting me
programmed.
along, so I got
You never
Tennessee
know
out.
what's going to happen on this show.
Yeah.
We're unedited and we're real. I mean, we're real people. People do business with us because they do continue business with us over and over. You've been in real estate
14 years.
14. Geez, time has stopped still. 25 for me.
No, I lied. That was history major math. I started in 2014. This is 2011. I don't even know what it is.
11.
2025. So 11 years.
Got it.
That's
So,
why I
and I
always say
can't,
history major math.
you've got, you've got customers you've done 4 and 5 transactions for coming up. I
So
mean,
one of
I
the
have,
ones that we were talking with yesterday, the clients that we were talking with yesterday, I met them when they moved to Spring Hill. And at that time, it was a little easier for realtors to help with rentals. And
mhm.
they were renting until they figured out where they wanted to be. And that was in July of 2014. He moved down here to be a police officer. He's since gone to do other things, but that's how long I've known them. And a lot of my business started from people I helped rent because my philosophy was, let me help you get a roof over your head. It helps keep one over my family's.
Right? I've never heard you say that one. We
Oh
can
yeah,
bring
it's
that
in my
back.
bio video.
We need to play that.
Yeah.
Maybe we can do that. Maybe I'll play that a little bit later. Really great. I
The
believe
outro.
Dan, yeah, a really good friend of ours, Dan, put that together,
Yeah,
and
excellent.
give him a little
Storyteller
plug.
videos. Yep.
But the good news is that people are looking at our videos, and as I was talking to Jennifer, I'm like, I don't know where these are going. I mean, how I'm getting these, and we kind of had a eureka moment. Like, well, that's what they've always told us is going to drive the business. You know,
Mm-hmm.
these videos are starting to get traction. Jennifer, especially, hats off to you. The last 2 weeks, you've really been sharing other people's properties. Check out this property. It's that constant barrage of, I mean, you're being rewarded for that, but you should be rewarded because you worked hard. So I'm seeing a little bit of it. I'm super excited. It stunned me because, for example, my boss, Michael, here in the office, Michael, tremendous leader in the industry. I figured that his name would show up first, and he does a whole lot more social media than I do. I'm not really sure of the algorithms, but it made me really feel really good that I would be up there on that list. And there's a lot of great lenders in this area that I'm up there with. So, not saying that I'm not a great lender. I'm just saying, based on the volume in the last couple of years, I'm surprised. And hey, the Lord provides. So
That
that's super
actually is
exciting.
one of the things that we were talking about that it plays so well with what we want to talk about. If you find lands on the internet and you already have an agent, that's fine. Of course, I would love to help you. But if you already have an agent, the best thing you can do for your transaction is introduce Lance and your agent. Because most agents are going to have a lender that they know, like, trust, do business with. They're very fluid the way Lance and I are. And that's one of the things that we wanted to talk about today. Is I say a lot, friends don't let friends call 800 numbers.
Oh
But one of
yeah.
the other things is I had an offer on my listing this weekend, and it was from a local smaller bank. Nothing wrong with that. There were some situations when I was buying my house with my son's mortgage that I needed to go to my small local bank instead of Lance. I'm very grateful for David Delk at First Commerce to have an in-house loan that was not available to Lance, which is really rare. But David knows that also I'm going to be refinancing with Lance because part of that loan was if you think interest rates are high through Lance, I'm going to tell you it's higher, but I wanted this house. And so I'm like, I'll suck it up for a year, 2 years, and then I'll refi with Lance once I'm on my son's mortgage. He pays everything, but I'm on the account, or I was on the account that he was paying things from because we set it up when he was 16. And so we were not able to get an exclusion for that to prove that he was paying the mortgage and not me. So we've got that taken care of now. It was something I'd never heard of. And we just, for whatever reason, we didn't think about it as it pertained to me looking for a house. So, because I really wasn't looking when I found this house, I was looking for other people. And then I
Right.
was like, no, I want that one. So, but anyhow, this client, this buyer for a different agent had a small local bank and they wanted to put an offer on the house that I had listed. I think we got it Friday night or Saturday morning. Small local bank.
The one down Colioca. Yeah.
What am I going to do as a list agent? I'm going to call the lender. Have you seen docs? Well, first of all, do we have a pre-approval letter saying that they can buy at this amount? Secondly, have you seen docs on this pre-approval? Have you pulled credit? How much of a pre-approval is this? Is it just a conversation that, yeah, I make $185,000 a year and all this? But it turned out this was a friend of theirs. And so they did have contact, just like I have contact with mine on my, local banker. I have contact with him on the weekends. Looking for one of those, by the way, let's put a plug in for our friend, Clay Barnes. Great local banker in Spring Hill. Available. These availability is what is missing in our world and on our 800 numbers. At any rate, we were indeed able to get in touch with them. That was not the buyer's agent's regular lender that she worked with. It made her very nervous because he was an unknown entity. It's not that if your agent suggests a lender to you, and I usually say, call Lance, call whoever you want, but call Lance for sure, because I know how he does business and I know the depth of programs that he has available to him. Mine was an absolute rarity. I don't know, other than me, anyone you've not been able to get a loan for that was able to qualify somewhere else. I really don't, but whatever. And that was really, it was more on me having things set up oddly, not on Lance.
Well, we call it let's call it what it is. It was an opportunity cost. So it was an opportunity cost. You knew when you did this, when you've helped all of your children in some capacity or another. So your son, it was an opportunity cost that it was going to be an opportunity for him to attain home ownership. And damn, if we didn't hit it at the right time. We bought that house in 2021.
2021. Yes, he was.
I think it's been 4 years. Yep. So he gets in an area south of Nashville that she knew it was on the radar, but now it's like, if you're going to have a starter home, you're going to head down that Lewisburg.
Yeah.
Lewisburg.
And it was a 1,800 square foot house for $240 on almost an acre.
Town, pretty much.
And close to the freeway. Yeah, it's south of Nashville, but it's still close to the freeway. And he was 2 points short on his credit need
to do it on his own
because he only had a car payment. He didn't have any other lines of credit.
So the opportunity cost was that Jennifer knew that when she went to move from Spring Hill, her logo is "I play in the country." Her slogan is "I play in the country," and friends don't let friends use 800 numbers. Yeah. And she just told me another one today that I didn't know. What was that one again that we were talking about earlier?
Well, with the rentals, I'll help you put a roof over your head because it's keeping a roof over my family.
I love that. I never heard her say that before. So she's got 3 slogans, they'll all fit in there. The opportunity cost for her was she knew that when she moved that, she knew rates weren't going to stay low forever. Just like I knew in 2005 in the mortgage business that this free money for everyone wasn't going to last. For years, we were sitting around going, what, dude, is today the day? Is today it all falls apart? And it finally did in 2008. Anyway, the opportunity cost for Jennifer was she knew that at some point she was going to make a move, but because she was a co-signer on that loan with her son, she knew that was going to be figured into her debt to income ratio. Yeah. And I know some of you are saying, wait a second. Some people in the background are going, wait a second. If he pays that on his own for 12 months, it doesn't have to be counted in. That's not always exactly true. And because of this great mother, she's one of the beneficiaries on the account. In case something ever happened to her son, she could help with that. So that threw a little bit of a wrench in. Anyway, so I just couldn't get around. We couldn't work through it. And thank goodness the bank, Mr. Delp, that she was talking about was available to help her with that. And so the opportunity cost is the high interest rate. The opportunity cost is it's
a 5-year. It's amortized.
It's not super high. It's not high.
Well,
it's just different.
It's 8.5, and it's a 30-year amortization with a 5-year balloon.
Got it. So and by the way, if y'all are listening to that, that's not predatory lending. That's not a bad thing. For Jennifer, that's what worked.
Yeah.
And when she talks about calling me and says I'm always going to talk, there are things I cannot do, and there have been conversations where I say, we just did it the other day. I'm like, you need, who was it? I'm like, you need to go talk to a local bank. Do
Yeah.
you remember? It was somebody. I was like,
Um,
we can't do this. But
I
I
can't.
learned.
But let's talk about some of the things that's happened this week. Okay,
Okay.
let's talk about excluding a property of a spouse or a debt of a spouse. We've had that arise this week.
All right.
You
Refresh
know,
me.
you have
We don't have our little notes scripted on this, but it.
no, we're not going to go into details. But one of the spouses was on the mortgage, the other wasn't. The one who was not on the mortgage had a debt. They paid it. It was not onerous,
Okay. Got it.
but
Yeah.
we had to prove that that spouse was paying it.
Absolutely. So a lot of times we'll have a premarital asset that comes into the transaction from a married. Premarital comes from a previous marriage, or
I bought a condo in Florida.
Yep, the title will
I
be
bought a place in England. No,
right. The title will be in the name of that spouse, and the one Jennifer is talking about, it was actually in both spouses' names. And a lot of people will do that. The loan was in the one spouse's name, and out of love for their spouse, they quit claimed on for succession planning, things like that. I don't think that's the right word, not secession, but what's it? I said it wrong, but estate planning. And we worked through it, explained it to the bar. They completely understood it. We moved on, made it happen. What's another one that happened? We had an 800 number borrower and some
the amount of things that were rife wrong with this. I'm going to start with the one that just absolutely she cold sweat. She was told that her closing costs were going to be $6,000 to $8,000.
On a $500,000, on a $500,000, call it $500,000 purchase. She called me. She had talked to a 1-800 number and had done business with.
Has a loan with and has good rapport with, not just a stranger danger.
Had done business with these people before, stranger danger. And she said, can you match this? I'm getting a rate of XYZ and it's going to be $8,000 a cost. And I said, that's not possible. I said, I want an opportunity to put what I've got in front of you. It's going to look much different, but what you're being told, I'm not saying they did it nefariously. I'm not saying they're fibbing to you. Perhaps a mistake was made, but it's not possible what they're offering you.
Because you're all playing on the same ball. You're all playing. It's like the NFL. They're all playing with the same overarching rules.
Yep.
You all
in most of the cases, the same salary cap. It's all how you use
whatever it is. Yeah, I'm much more baseball. By the way, it's gonna start rocking down here. I hear some big thunder.
It's rocking here up in Franklin. You're down in Winchester. We're 2 hours apart, and I think it's just coming straight up out of the south. That means you'll have a good weekend.
Yeah.
So a couple of weeks, we fast forwarded a couple of weeks as we went through this, as she was making her decisions, and then she got the other lender. This person sent in their documents, and it was completely. It was 300% of what they told her it would be, and
like there were 22,000, and she was having a cover party because she had planned on these numbers. And my first comment to you, Lance, was, how can they do this? I thought we had truth in lending and had to disclose, and this can't vary at all, and this can only vary by this amount, and this we have no clue about. So, it's on like insurance. Insurance can vary because we don't know what you're out there doing.
Well, the truth of the matter is, until the LE, the loan estimate, is issued, there really nothing matters, because the LE is the instrument that everything is measured against. And so from the time the contract arrives, you have the actual property address, and it goes into the origination system. You have 3 business days to disclose the initial LE. So before that, there's all kinds of jockeying, and you've seen this in the past. I know of customers have told me this in the past, and some people said it recently, where they'll get to the table and people are completely shell-shocked by what they're seeing at the table. This would never happen, I don't think, with any of the lenders I know in this area. They're face-to-face. Those of us like yourself that are left, I think, are the cream of the crop. But there are online entities that there's new people sitting in the seat. They're following the script. They they're desperate to get the business. They'll just say whatever, and hey, it'll wash out later. What's going to happen to me? And I'm not saying that's what happened in this case, but I do think that the loan officer didn't care about your customer's business like I did. I think that person may have taken it for granted, just thrown something against the wall. We'll figure it out. And from day one, I'm having 8 o'clock at night calls with her. We're doing FaceTime. And let me show you some other calculations. And
well, and that's one of my tags is I know a guy. And when I tell somebody, like Lance will be like, do you know a tree trimmer dude? And I'll be like, yeah, here's the number. Tell him I said hi, or tell him I sent you. And you know why I do that? Because I want to hear from you how they did. And trust me, they're going to hear from me how you think they did.
Not from you, from Mrs. Weithman.
Well, hopefully it's from Jennifer.
If it's not good.
Mrs. Weithman, you want to just leave her locked behind her door. So yeah, I mean, that's part of that. And that's part of having that known lender. Lance, we were talking about how you're going to give kind of the worst case scenario on the numbers so that you get to the closing table and you're like, oh, you know what? We thought we were going to have to bring 15, 18,000 to the table, but surprise, it's only 13.
Yeah.
Or whatever.
And actually the TRID is designed that way. The law was originally intended so that you over disclosed and overperformed later. But as we've gotten into the so-called competitive market, people have really started to, there probably are metrics that show what consumers look at and what their, I won't say names, but you knew a person once who would find a way to hide things. Like, I know it, that person would always hide things, and it was within the metrics of what you could do, but it probably wasn't the right thing.
It was fees for them. They were lining their pockets, and that people would even ask them, are there any undisclosed fees? And they were disclosed, but they weren't disclosed where they were all going.
In a unique way. Yeah.
Yeah. Okay. So some of the things that we know to look for. Well, first of all, let me just say new construction has gotten better at this, because if you have a piece of raw dirt, it's going to be what? 20,000, 50,000 on the tax record. And you're going to get a couple $100.
If that. Yeah. Yeah. So it's unapproved land. So it's going to have little to no. A lot of times we'll mistakenly see that forwarded to the listing.
Yeah, but you put a $600,000 house on it, and you still have that 100 divided by 12, or history major math, 2,400 divided by 12. So it's $20 a month. But in reality, it's 600. So maybe that is, again, history major math, 3,600. So instead of $20, it's $300 a month. And then what happens is when the tax bill comes due in October to be paid in February, the escrow does a settle up, and your mortgage has just gone up $280.
If it got through, you're right. If it got through,
so that's a lot of times I look at on the Altas.
You look for it, right?
Yeah, I do.
We look for it because it would be considered mortgage shock. It would be payment shock.
Yeah.
So we're looking for it up front, and when we don't, if we have a new development that, of course, it can't be taxed yet until it's assessed, and it can't be assessed until it's closed and completed property. So what we do on that is we have the title companies, they will prepare an estimate, but it's not it's always over. They'll do an estimate of what the taxation is going to be. And I say it's always over. Almost 90% of the time it's over. And then sometimes, Jennifer, that first October, like if they closed and their first payment now is due August, September, October, their second payment, it might be adjusted downward. It might be. It's funny you say that, because sometimes a lot, that's where we're saving a deal from an 800 lender, because they didn't take that into consideration. They're like, oh, it says $20 a month, you're good to go. Well, when you add $250 to that debt to income in today's times, you could be taking someone from a 47% debt income ratio to 52, and now they're not eligible, and you can't figure that out later.
And so what was the other thing that this guy did? I said that insurance, we don't know how much it's going to be. So insurance is based on where your house is, how old the roof is, your past claim history, in some cases, your credit score. All these things go in. Some companies like this house better. We think you're going to go with this kind of a company and it's going to be $200, but you go with guy over here who's your bestie, which I had this happen once, bestie, and instead of $200 a month, they went with bestie, $400 a month. I love my friends, but I will stroke you a check for $200 rather than give you an extra $2,400 a month, right?
Mm-hmm.
So we know that in Middle Tennessee on a $500,000 house, you are probably going to be 1,800 is a low per year
That's a
insurance.
low number.
It
18
would
to
be
26 is going to be your
1,800
number.
would be a high deductible and some other things that you've done. New roof, maybe hardy border brick, something that's gonna, fire resistant, fire hydrants in your front yard, something like that. Majority of time, we usually put in $200 to $300 in that field of estimated per month insurance.
Yeah.
Tell them what this
On
guy did.
this one, they
800.
cut it back to $100, 115. So not
I haven't
possible.
had insurance for $100 a month
Yeah.
since probably 2016.
And so the question becomes, did they do it on purpose? Did they know it? I don't know that, but what I do know is it made the customer feel better about what they thought their transaction was going to be. Well, their payment's much lower. Well, that was one instant. The taxes
Well,
were
hold
also
on.
off.
The other one was the per diem interest. Explain per diem interest, what it
Yeah,
is, when it's paid, how you calculate it. I'm still not closing people on the last day of the month. Don't even think about it. We're not doing
it's
it.
okay. I'll say it like this. So let's make believe that your payment was $3,100 a month. Let's make believe that's about a $400,000 house in Middle Tennessee at today's rates.
Mhm.
$3,100. I'm using that number because typically there's 31 days in the month. So if you divide $3,100 by 31 days, that means that your per diem, the cost that it would be for you to live in your home, is $100 a day. So if you live in your house for 10 days, it's $1,000. On 24 days, it costs you $2,400, and then you pay $3,100 as your mortgage. Remember this, folks. The mortgage is the only financial instrument that accrues in arrears. So when you pay your rent, you pay it on the first of the month. You're actually paying for the first all the way through the 31st. You're due on the first for the following month. In mortgage, interest accrues daily. You make the loan, and as you live in the house, as you move through the month and you get to the end of it, you now owe your set payment. You send in your payment. That was for the month before that you lived in the house. So that's how you can. That's another session we can do about how to defeat interest by prepaying towards your principal, because you'll defeat that calculation because it accrues in arrears. But in this instance, I know that the loan that Jennifer was helping this person, I'm making up the date, was closing on the 15th. But this document that came from the other lender had it closing on the 23rd. That means there's only 7 days of odd days interest till the end of the month. And that's what they would collect to get it on a 30-day schedule. Well,
Collect at
that's
closing as part of the closing
correct.
cost.
And that's a
6,000,
difference.
8,000 versus 22,000.
Yeah, it's a difference of 8 days. So, Lance, it's just 8 days, but 8 times 100 is $800. So when you're looking at what someone's bringing to the closing table, $800, whatever distance is going is a different. I know it's closing on the 15th, so my number was $1,500 to the table. But for some reason, these people pushed it out and kind of made it look a little bit better. It was only going to be 800. When you add all those things up, it
And
meant
they
less
had
money
a
to the
copy of the
table.
contract.
Right? But it was correct. But it wasn't true. It wasn't. Yeah, they had sent pre-approval. It wasn't true. They knew what the closing date was, and they knew that later, it's one of those gray areas that can change before it gets disclosed. So just little things like that. So we had the per diem, we had the insurance being off. Why would insurance being off matter? So if it was going to be $3,600 a year, which is a payment of $300, and instead they chose to make it up at $100 a month, at $1,200 a year, which is $100 a month, that's a delta of $200. Well, when you move into a house and you're financing your escrows, you're going to pay the first year upfront as part of the closing costs. So $200 times 12 months is a difference of $2,400. When I add that to the $800 that other person had, that's $3,200. And you purport yourself that, oh, look, I'm so much better than lender B because my fees are $3,400 less. It's not exactly true.
Yeah, exactly.
And it'll come out in the wash when it gets to the LE, but sometimes the customer doesn't look at that very closely. So
now
it
let's
was
talk
nice.
about that for a second too. The LE, you cannot generate it until you have a contract. Is that correct?
Correct. And an address.
Yeah. So
the contract
what
gives us the
can
address.
you
Yes.
give somebody, if I call up and I go, Lance, I think I want to buy a house with a dock on the lake. What can I afford? What's it look like? How can you give me scenario breakdowns that are not $15,000 off?
This is where experience comes into play. And I guess
Yeah.
maybe someday they'll probably say that's an unfair advantage. But I can call, if it
So
wasn't
are
Jennifer's
brains,
deal,
but we
let's say it
still
was
have them.
another, what was that?
So are brains, but we still have them.
Yeah. Let's say there was another person that sent me that deal and it was on in Winchester. It was on the lake. So what would I do? Well, the numbers part of it, I can look at their income. I can, what kind of town, what part, I'm looking in Winchester, Tennessee. All right, what's the sales price? I can do some rough figures like that. But there's a bunch of variables I don't know yet until I pull their credit. Number one, the credit's going to determine maybe what their interest rate is, but more importantly, credit plays a part in what their insurance cost is going to be, because the
Yeah.
insurance industry is going to look at someone's credit too. And if you don't think they don't risk grade based on someone's credit, you're mistaken. They're going to do that. So you could have a pretty wide 15, 20, 30% delta in insurance costs based on a person's history of their credit. Well, how would a bankruptcy play into that? They also look at, losses that people have had in the past. So that's one thing that would go into it. So that'd be an insurance cost. The next would be taxation. In Nashville, or what we call the Nashville area, different counties, Davidson to Wilson to Murray to
Murray and
Williamson have
Williamson. Do
crazy
you know
different
which
tax
is
structures.
higher, Murray or Williamson?
I would guess Murray is right now.
Murray is higher, and it has tracked higher for the whole time I've been in real estate. And everybody thinks that taxes are going to be higher in Williamson County, but homes are more expensive, and there's more business to collect taxes from.
High
And
end
then there's
business.
some places like Spring Hill. I think it was the fourth or fifth year that we lived there. They did away with property taxes for a minute. For 2-3 years, we didn't have property taxes. They're like, we got enough money. We're budgeting well.
Then came the
I'm here
assessment,
to bring that back. Let's go.
right? You're going to manifest it. But Davidson County easily could be 3 times or 4 times what it is here in Williamson County. So that's where the experience comes in. That's where I'm really pressing questions in that initial call. Where are you going to be? So we're going to take it back to Winchester.
Yeah.
So I'm probably going to call Jennifer and say, okay, Sally sent me this deal. It's a lake property. Are there any special assessments? Is there a dock fee I need to know about? Do you see any? And she can inform me about that and look into it. Is there a city tax there? Is there just a county tax? Or is there a city and a county like Rutherford County and Murfreesboro? Yeah. So those numbers, that will throw things off wildly. So Jennifer, to answer your question, I'm going to take a lot into consideration, and many of it's calls to other realtors I worked with. And sometimes I call title companies too. I say, hey, I don't understand Perry County. What can you tell me about title down there? Oh, that's going to have to be an abstract. So I can give people a pretty good, but I don't know if you were going for this, but I'm going to go mine's not going to be in the pie in the sky. Oh, it's just great. It's going to be an $1,800 a month payment. I'm going to say, hey, until you can drill down to what that specific property is, I'm going to err with some caution so you're not shell shocked and surprised. And guess what? Some people don't like that. Some people, they go their way and they end up getting burned, and most of them don't come back. I think that's a human thing, like, oh gosh, I don't want to call back, and I don't know what I'm trying to say.
Well,
But
and let's talk for a minute about any company that has the name veteran or military or whatever combination of they're in. And everybody automatically thinks that they're looking out for the people who have served or are serving.
Yeah.
And quite frankly, a lot of them are predatory. What was it? I shared a different lender from you who I love. And she's licensed in Tennessee now, but she's also grew up in the Norfolk area, Hines. And she had one, it was a veteran, and there were like $15,000 in fees.
Oh,
I'm going to talk closing costs. Like, it was ridiculous. Or she shared it. I mean, it wasn't hers. She shared that this is what she was competing against. She's like, are you serious? And then you also, we've had ones way back in the day. I had a Marine who had been stationed here as a recruiting officer. And then he got out and stayed here. And he and his family were going to buy their first home. And he called a big company. And they did his income to debt ratio. And he had taken a new job no longer with the U.S. Marines, and he was getting bonus structure. He'd been in the job 2 months, and they were counting his bonus structure. And I was telling him, you can't do that. And they had already given notice on the rental house I had helped them find. They were another one of my early rental clients that then bought with me. They had already given notice on that rental house. They were not going to be able to stay there. Now they're maybe not going to be able to get this new home. It's a complete mess. She ended up going out and getting a part-time job overnight while he's home with the 3 kids during the night and she's home during the. It was a mess because the qualification was not well. So when a realtor says, I would like you to talk to my lender, it's because we want to know that it's been very well done, that you understand the process. And also, one of the things that Lance and I do is, okay, can this person, you've got them approved FHA. Is there a chance if the needs to go conventional because of condition of home or something like that, is there a way that we can get them to conventional? Okay, you say that we would like, $10,000 in closing costs. Is that a need or is it a want? So we have these conversations so that if I take my buyer out, we see the house, I know they're pre-approved with Lance, I know we're going to be conventional, I know I'm going to try and get 2% closing costs and title. That's what I'm trying to do. I know how fast we're going to get it closed. Does the seller need a 21-day close? Is that going to be appealing? Can we put that in the offer? Because you can do that. So I called the list agent up. I'm like, hey, we had a great showing. I'm getting ready to prepare you an offer. What, in addition to money, is important to your person? Well, they would really like a conventional, or they would really like, we were thinking about asking for some closing costs. They don't have that flexibility. And then I'm like, okay, well, Lance said they needed this. And so, okay, you don't have that flexibility, but do you think that the house would appraise 5,000 over asking price? Because we need that. And then we can have that discussion fluidly because I've already talked with Lance, and not that he's sharing your business as his client and my client combined, but helping me be able, I don't know all the details. I just know what he says you got to have. And I know where you're flexible on it. And it's a poker game where I need to know what and how I can help you.
Yep.
And so that's really important. Lance, from your side, what is beneficial on having agents, obviously that you can refer people to who call up and don't have an agent. But for you, what's the benefit of working with someone like me, or is it Starling that you work with some too, or some of the Renee, that they trust you, but how does it make your life easier, or does it not matter who you're working with?
Well, I like to have vetted partners because they're not setting up unrealistic expectations to the borrower. I just learned, I heard last night that someone I know is getting their real estate license, and frankly, this person's not very personal, and I just can't even fathom it. I can't even fathom it. But I know if it's coming, it's a legitimate. I know that they're legitimately being looked out for. I know that. It's okay to shop people. It's okay to put me up against someone. I don't mind that at all. I know that if it comes from you or Renee or Starling, I know that it's a very strong relationship that you have with the buyer. In all 3 of those cases, it's a previous person or a referred from a previous client of yours, a very strong person.
And the other thing I just thought about is, when we're talking about this is an FHA, this is a conventional. And I've told you, no, this house, I've seen it. It's going to go, this is.
I'm laughing because she's proved herself right several times. And I'm like, I don't know, Jennifer. No, don't do it. No.
Abort mission. I'm like, we're good. I got this one.
Congratulations. Here's your keys. And I'm like, sure glad we did that conventional. But that's the person. She knows her business. There's also been times where I'm like, we'll figure a way to get this done. Or I'm like, there's no way they're getting a loan. Yeah. So no matter what those people, I wanted to point something out to you. We were talking about that $60,000 fee for veterans. I did some calculations while we were talking, and there's a lot of this is not aimed at you. You're going to bristle up on this and agree with me. There's a lot of misinformation about VA loans, even locally in our market. They're kind of scorned upon, which is garbage.
Yeah, go back and
They're
watch
very.
my other YouTubes.
Say it again.
Go back and watch
Oh,
any of my
watch your other
YouTubes.
YouTubes. Exactly. Check. Look
I'll
for
tell
a
you what,
veteran.
there's some of the most popular YouTubes is when I'm talking
Yep.
about VA guidelines and their skin in the game, and kiss my whole butt about what skin in the game a veteran or active duty
Yeah.
line.
Evidently, there's a lot of VA offers that are shut down because there's a misconception that they're a difficult loan, and they're really not. And they're a very secure loan. They're the best performing loans. So
I think that they're working on making that a
protected status.
Yes.
For an offer. Yeah. How about that? I think what Jennifer's saying is that a lot of consideration would go into an offer from a veteran as a protected class, kind of like for job applications, college admissions, things like that.
Right.
If it's fair, it needs
to know what kind of loan you're working with. You do. If you have a house in a certain condition, you need to know if it's conventional or whatever. But FHA, USDA, VA, I've said it a million times, they're all going to have very similar underwriting guidelines. But again, Tidewater, if it's coming in short, that's the one you're going to know about it on. I think it's the state of New York has now dumbed out the buyer's name.
I don't know, but it would make sense
because of ethnic background. Because they don't want fair housing against ethnic status.
Yeah, right. What Jennifer's experienced personally, and I've heard through the grapevine, hasn't happened. She's just in a different position where she can see this. Is you could have an FHA, a house listed for $400,000. 2 offers come in for $400,000. One would be conventional, one would be FHA, 3, and one be VA. The VA is going to be thrown out right away. Oh, those are too difficult. They'll never get done. And that's it's miseducation. It's misinformation. So she's made it a personal goal of hers to get people better educated about that. And we should probably do a video about that.
Well, and that will be Mrs. Weithman. So we had a mutual client, a friend of ours' daughter and her son-in-law, and they were both retired Navy. And they went up against cash offer. And I had never worked with the agent on the other side, but I called him up and I said, this is a well-written, underwritten VA loan. They are good to go. You will not experience difficulties. I've seen the house. There's nothing with the house that's going to cause an issue on a VA loan, and they took the offer because of how I presented my clients as competent buyers and myself as a competent, not difficult to work with agent, and the loan as a not difficult to work with loan. So we, during COVID, beat out a cash offer or 2 with VA.
Yeah, we did it.
That's having somebody stand up and rally for you, whether you're a veteran or not. But I mean, to be honest, as I sit here with my American heart on, I am going to rally for our veterans, but I'm going to rally for all my clients.
Sure. I'm going to finish my thought on that.
Oh, yeah.
On a VA loan, a non-disabled vet, which means 10% or less of disability, on a recurring use. Let's say that when they were 25, they used a VA loan, and now they're 40. They retired. They're buying their first house here in Franklin. They're going to have what's called a recurring use fee. It is 3.35% of the loan amount. So if it was a $650,000 house, the VA funding fee alone would be $32,500. Now, that is built into the loan. So if the loan was $600, it would be $600. It would be that $32,250 is added to the loan amount. Okay, and then we should do a podcast about this. But money's expensive right now, and why? That doesn't just mean rate. The cost to get the rate is expensive. There's a point or 2 points in origination or discount. Why is that? Real snippety here. It's because the entire market, Wall Street knows that anything of these loans originated in the last few years, at some point in the near future, are going to all be paid off. Not by the government paying it for people, by the fact that interest rates are going to go down and they're all going to be refinanced. And when that loan is refinanced, the future of that note ceases to exist. So there's no a 30-year spread, when you look at a $200,000 mortgage for 30 years, you pay $600,000 in interest and you still pay. That's not going to be realized. So they have to make their money up front. So in that example, Jennifer, on a 650,000, if there were 2 points in there, that was an additional 22,750. And voila, we're at $50,000 in fees, and we haven't added the taxes on the, let's say it was in Davidson County. So it can be easy. And this is something this is where Jennifer would say,
loan fees. This was the lender's take.
Got it.
Was 15,000. It was ridiculous.
And there's where I was going to go. Jennifer's not just going to take it for hearing that. She's going to dig in and say, let me see it. And if she saw that there was 32.5 in the funding fee, she'd say, that's what that is. Yeah. So you have to be careful. But it's easy on some of these larger loans to have really big numbers in the left column, which the consumer needs help understanding that some of those, what I always say, Jennifer said, that fee is paid by one of three different parties. You, the buyer, there's three different people that can pay for that. The lender can pay in that, the buyer can pay in that, the seller can pay in that, and the lender. So that's the three of us. But we still have to disclose to you as a consumer every fee associated with the loan, regardless of who's responsible for it.
Right. And that's apples to apples. Like I always tell my people, check with Lance, check rates, check fees. Because
if you don't know how to read an Alta, you'll think that you're paying realtors fees if you don't know how to read it.
Well, also, but I mean, y'all are almost all working with the same rates.
Yeah.
You know, and that's the same thing with understanding the numbers on the insurance. I say, you know, I tell them, check your auto and your home. Somebody might be better on auto. Somebody might be better on home. But where do you have the best overall insurance payout? But for God's sakes, when you're checking your homeowner's insurance, find out how they do roofs in particular. Like we were talking about with Benjamin last week or the week before. How do you do roofs? Do you have sinkhole coverage? In Tennessee, you have to say if you have sinkhole coverage or if it's a rider. Is there earthquake insurance? Like we're not going to have a my house fell down earthquake in Tennessee. We could very easily have my house has structural damage of 25,000 in Tennessee. And the way her earthquake insurance works is it's 10% of the cost, the value of your home is what they give you. So $600,000 home, they're going to give you 60,000. That's going to fix most all structural issues. But what do you know? What do you not know? So you have to compare apples to apples in insurance and in lending. And honestly, in what your realtor is going to bring. When you're hiring a realtor, are you available? Are you my realtor or as somebody on your team or multiple somebody's on my team? Do your choice. I don't care if you work with a team or not. But if I'm hiring you, am I hiring you? How accessible are you to me? It's like when you're going in to have a baby. Are you going to be delivering my baby, doctor? Or is it going to be one of your coworkers? And what you're shifting on your computer, your picture. But at what point do I get to meet these other people? And do they get to, your camera's following you? It's not following you. Okay. So, but, you know, you should ask your realtor, are you going to be working with me? How available are you? Are you going to be going out of town? Because God bless, every time we want to go out of town, have a wedding or a funeral, that's when things get busy. But I have backup people. What is your close ratio? Now, what does that mean? As a buyer and as a seller, those numbers are usually different. Buyer agent, I run at about 98, 99%. So if a house is listed, history major math, not going to happen in Nashville, $100,000, I'm going to get it from my buyer at 98 to 99. My sellers, the last 2 years, we have seller aspirations. I usually ran 100 to 101 for my sellers. Right now, I'm running about 99 because everybody has aspirational pricing, and we'll go into that another time. What else about, you know, just the lender? You know, we've talked about how availability, really clear disclosures, that realtor is going to be able to rely on you and have a rapport with you. Again, I'm going to say it again, said it at the beginning. If you find Lance online, that is wonderful. You are in great hands. Make sure your realtor knows that you're in great hands too. Introduce them. And you know what that's going to do? It's going to help that realtor be a better agent because now they have Lance in their pocket.
And same with Jennifer.
Yeah. So yeah, I'm available to help Winchester to Nashville.
and other. She's awesome. I have said some thoughts I put down. We'll do it our next calls because we're coming on an hour right now. But there's people that are watching this that have had a bad experience in lending before, and they're probably looking to or with a realtor. And we had a presentation this week by a person in a professional networking group that Jennifer and I belong to, and I wrote down a couple things that he said, and two of them really stuck out to me. One is that we all have the freedom to make the next choice.
Mm-hmm.
As long as you're here and breathing today, you have the freedom to make your next choice. No one's going to make it for you. So you can look collectively at the things that happened in the past and make a choice. But that ties in with the next thing that he said. And it's like, if you don't have the time to do something right now, when will you have the time to do it over? I thought that was really cool.
Well, and I'm going to ask you on that too. Is it easier to do something right the first time or fix something you didn't or someone else didn't?
And that's what it's saying.
Yeah.
So we're Jennifer Weichman, Lance Dameyer. We love doing these podcasts. We hope you watch. Please share these. If you watch one of these, I noticed last week, a couple of my friends watched them and made some, one of my friends made a Cheetos comment. I know you're watching it if you picked up on that. We're on YouTube. We're on Facebook. We're on LinkedIn. Jennifer has, do you have a website? Are you?
I do. I love My TN Home is my website. And you can go there and look for homes across Middle Tennessee. I don't think I have it set up that you have to put in your email and all that to look. To save homes, you may need to. But I've always said, I am busy enough that I don't chase you if you don't want me.
Well, one second. Go ahead, Jen.
And I'm not too busy to help anybody who needs me. So next week, this will come out on Monday, the 30th. My mama's birthday is Sunday. Next week, we'll be recording right before the 4th of July. It'll come out on the 7th. And then the next recording is what after that? What day is that Wednesday?
The 9th of July.
So I will be over by Langley, but we'll still do the podcast.
We'll figure it out. We'll do it from the flight line.
Yeah. Yeah, right. That'd be fun. Did I tell you really quick? Did I tell you what I got tickets for my kids and I to do on Friday the 11th?
White House
tour. So we're going to see a bunch of museums and things, but I've never been inside the White House, so I'm pretty stoked.
Well, let me close my door because someone just arrived to meet these people, so I was just going to end it. But go ahead.
No. So
all right, awesome. The White House. So we're going to, can we do a podcast from there? That would be awesome.
It'd be big and it'd be beautiful, but I don't know if we're allowed.
Big, bold, and beautiful. All right, we're at 53 minutes. This has been our podcast, Keys to Home. We hope that we made a difference in your lives. Happy 4th. I hope you had happy 4th. It'll be in a couple of days.
Yeah. We'll record one more time before the 4th, but yes.
All right. Y'all have a great day. Take care.